some people say that like constraint breeds like innovation or whatever the saying is. When you have less options, you can be a lot more creative and get a lot more out of those options. Do you feel like, or have you started to make more like less smart decisions just because you have so much more spending power, so much more access?
Yeah, I'm definitely making a lot of dumb investments that I don't think make financial sense. Like for example, I just invested with Praneet in 5 YC startups from this last batch.
Okay.
And so I gave you the example of PlanGrid earlier. So I invested in PlanGrid. I invested $50,000. PlanGrid got acquired for like $800 or $900 million by Autodesk. That $50,000 turned into probably 2.1, 2.2 million. But the reason for that is I invested at probably a $5 or $6 million valuation.
Interesting.
The YC companies I just invested in, all 5 are pre-product market fit. They have not yet achieved product market fit. They're all pre-seed deals, and their valuations were 50 million.
Oh no.
35 million, 20 million, 20 million, 15 million.
Interesting.
So no matter how big those businesses are,
the return's not really going to make a difference.
The economics are going to be very bad.
So why did you invest in them?
I just kind of started taking a bunch of meetings with YC founders and got excited about these businesses and was like, I just kind of want to follow along. I think there's also this, I think everyone lives in a bubble where they care about the thing that the people in that bubble care about. So Silicon Valley is this crazy incestuous bubble. So rich people don't buy, Prada shirts or Ferraris. The houses in San Francisco all feel like they're in the same neighborhood. So the price difference between houses in different neighborhoods is like not as dramatic as places like LA or New York. So the status symbols of Silicon Valley are not like those things: cars, Prada, house. They're like what startups you invest in.
What does your previous in your bio say, or like what is your angel check, angel in?
Yeah. So people collect startup investments and put them up in the wall, or like the way that people collect cars to show off in a garage.
Yeah.
And that's the currency and status symbol of Silicon Valley, angel investing. So I think a lot of the reason I do it today might be that. Actually, I would say I think it started out that. I think angel investing is a really bad financial investment for most people. I saw this tweet by this guy Gokul who was at Square, and he was like, here's the return of the NASDAQ 100 triple Q over the last 5 years. It's up X percent, like 300% or something. And over 5 years, you get 3X return with full liquidity. At any time, you could go and sell and do whatever you want. Whereas if you invest in a venture fund or if you angel invest in a deal, you're tied up for 10 years.
Yeah.
And the best ones are going to give you 4X back. So you're going to be able to get better returns with liquidity just by investing in the NASDAQ 100 or NASDAQ 50 versus investing in
like angels, venture funds.
Investing. Yeah, like my first ever angel investment was this company Chartboost. So at TinyCo, I was a customer of Chartboost, and I was like, oh, I'm going to invest because I love their product, and I'm paying them to use it. So I know that if I'm paying them, so many other people will, and then they're going to grow quickly. So I invested $100,000 at some valuation, say like $4 million, probably $4 million in 2011, and then the company sold 10 years later, almost to the day, in 2021. So that $100K turned into $2 million, but it took like 10, 11 years to do that.
Interesting.
Which is a long time. So, I was probably like 29 when I invested. I was 39 by the time I got the money.
And if you're really good at like sussing out which angel investment deals will return, you would probably make more money by just going and executing yourself on like ideas, basically.
Yeah. If you know what startups are good investment opportunities, maybe you can go and start companies in that space. But the hard part about that is I met this guy, Ed Lando, who probably when he was 25, and he was like, I'm a venture capitalist. He didn't have any money raised, but he was just like, I'm a venture capitalist, and then he became one. And he was like, my venture strategy is simple. I go meet as many people as possible. When I meet someone that's smart, I'm like, cool, what are you working on? I just want to own 10% of what you're working on. So he's like invested in maybe 50 companies or something like that. And so now he owns like 5 people, 500% of what smart people are doing. Like, he owns 50 times 10%.
Right.
So it's like owning 5 people that like are doing smart things, and he doesn't have to do the work. Those other people are doing all the work.
How did he convince them to give him 10%? Just like cash if he didn't have money at the time?
Yeah, he went out and would raise some money and eventually put together a venture fund and
take
all that
his own
stuff.
carry, basically.
Yeah.